I often paraphrase the compelling case made by Eric and Andrew, two MIT economists, in their influential book, Race Against the Machine, that there would be three specific groups of people who would thrive disproportionately in the new world. One, the superstars, the most talented ones in their field, whether it's consulting, writing, or singing. Second, the high skilled workers who can work with intelligent machines and technologies. Third, the owner or the investor who has access to capital to invest in the new technologies driving the great restructuring, as the proportion of the rewards returned to those who own the intelligent machines is growing. Today, I had the privilege to talk to an investor who invests in category creating or defining tech companies with superstar founders.
Welcome to Tech Me to the Future, our podcast about technology, innovation, and their impact on society and human behavior. Please welcome your host, Mayang Sanchetti.
Amit Somani is a managing partner at Prime Ventures, which is a Bangalore-based early-stage fund. Before this, he held leadership positions for 20 years at Make My Trip, Google, and IBM. In this episode, we talked about venture capital ecosystem and the rapidly changing startup ecosystem of India, and a bit on philosophy here and there. Amit, it's great to see you again. Welcome to the show.
Thanks, Mayank, for having me.
So, Amit, I wish to talk about a bunch of interesting stuff with you today. But before we jump into those details, why don't you walk us through your professional journey and perhaps your spiritual journey as well? I know that you're one of those philosopher investor. And so maybe you can talk about these two and how do you think these two complement each other?
Sure, Mayank. So I kind of grew up here in India, the classic sort of engineering path, went to one of the IITs and then went abroad to the US for grad school. And I was in, the University of Wisconsin at Madison doing my computer science grad school. And then overall spent about 14 years in the US and came back to India. And towards the latter part of that stint, I moved from engineering to product management. I know you do product management at Grab now. And then, that product management role led to a business role at Make My Trip, which is an online travel company based out of India. And then eventually I left and became what I call an accidental VC, because all my background is engineering, product, business, building products, building teams, building companies, and accidentally sort of ended up becoming a venture capitalist. I am now a partner at a firm called Prime Ventures, and we invest in early stage startups based out of Bangalore. So that's a quick sort of professional journey. The spiritual journey has been a little bit more recent years, I would say the last 5-6 years, and variety of different things. I have this habit of taking like a year off every 10 years. In fact, I've written a blog about this called, everyone should take a sabbatical once in 10 years. And so the last one I took, I got into a lot of this reading about variety of things from philosophy to psychology to mortality to all kinds of things. And that got me sort of restarted on that path. And that led to sort of more explorations around meditation, like Vipassana and reading the Bhagavad Gita and so on and so forth. So that sort of two parallel tracks there, but let me just pause there.
Very fascinating. There are a couple of threads that I would like to pull from there. One of my bucket list is also to do that 10-day Vipassana center in, McLeodganj. But let me touch upon a couple of professional aspects of you that you mentioned. Were there any specific transferable skill sets of product management that helped you as an investor as well? As a product manager myself, just curious to know in case I should keep VC as a career option for myself.
Absolutely. I mean, product managers, as you know, kind of are generally speaking, right? Sort of jack of all and masters of none, right? And unless you, of course, come with an engineering background or a customer service background or whatever you're sort of learned your kind of base trade. And therefore, I think there are a lot of things that are applicable to the VC world. I've never answered this question before, so I'm going to think on the fly here. So I think curiosity is like the number one trait, I think, for both product managers and VCs, right? So problem solving is another interesting trait. So obviously you're not in an operating role as a VC, but you're trying to see what problems make sense, right? Understanding customer mindset, is the market ready for it, and so forth. And again, we invest in early stage startups. So a lot of the product skills do work a lot, even in evaluating companies, right? Saying, is the customer ready for it? Is this the classic, vitamin or aspirin? Your curiosity takes you to various companies, right? One that I often cite is a company called MyGate in India, where I found, because I liked the product a lot, and we were apartment number 27 where they were deployed. So I picked up on that. So I think there are a lot of interesting things. I think the thing that you need to probably build on a lot more is all the financial muscle with respect to the kind of building an investing career. But I definitely think PMs can make great VCs.
Sounds good. You also mentioned that you lived in the US for about 14 years, right? What are the couple of things that you think work very well in India as well that you saw in the US, and we shouldn't shy in emulating those things in India? And what are the couple of things that you thought it would work in the context of India as well, but didn't?
Sure. So, if you'd asked me this question, Mayank, 10, 12 years ago when I moved back to India, 2007, my answer would have been very different, right? I think we were, relatively speaking, a fast follower kind of market, right? So we were trying to do the Google of India and the Facebook of India and so on and so forth. I think what has emerged beautifully, right, thanks to the digitization, thanks to the mobile internet penetration, thanks to even more talent, right, like product managers, engineers, AI, ML engineers, etc., that have emerged now, is a lot more India first problems are being solved here, which are actually relevant to the rest of the world. So
Hmm.
I think India can actually innovate for the next 5-6 billion, rather than being clones of US or China or whatever sort of developed economy. So I think India first problems are very interesting. Obviously, what can be inspirational still from the US is the rate and pace of sort of technology innovation, right? The rate and pace of solving more big, audacious problems, right? I think India is still at a stage where we are doing a lot more of the food and shelter issues, right? Whether it be in healthcare or education or digital India, or of course e-commerce and all the kind of roti kapda makan stuff, right? So I think
Hmm.
that those are things that we are, and I think that's just a maturity of the ecosystem that needs to happen, right, in terms of the economy evolving, the per capita evolving, and so forth. So I would say, I think India first for the rest of the world, but still be inspired by the rate and pace of kind of innovation from the valley and the other more emerging, some more evolved markets.
Interesting. This is something that I wanted to discuss probably at the later half of this podcast, but because you brought it up right now, India started with sort of an IT boom, building technologies for the US market, as you rightly mentioned. And then there has been an insurgence of a new set of entrepreneurs building for the Indian market and Indian netizens. But I still believe that at some level, there are very few big companies which have emerged from India, which are building for the world. I would like to leave aside the SaaS products, because I do believe there have been a lot of good companies coming from India in terms of SaaS products. But if we talk about B2C companies, I find only few examples, maybe Zomato and Oyo, which have been able to cross the boundaries. Why do you think that's the case? And you also mentioned about India first. Do you think founders should even aspire to go beyond India, or should they just focus and keep their appetite limited to in India?
Yeah, so I wouldn't actually dismiss SaaS, because I think it is the probably the flag bearer for sort of global products being done out of India, etc. But since you said let's park it aside, let's leave that aside for a moment. I think on B2C, right? You mentioned a few, right? Oyo, Zomato, now Byju's, and several other folks that are building global products kind of out of India. And like I said, there's a maturity of the ecosystem, right? You started, with this IT services revolution. I think SaaS, enterprise software came next, right? So companies like Dhruva and so forth. Now, some of the SaaS companies, right? So some of the earlier ones like the Freshworks and so forth. The real global product companies are now beginning to emerge, right?
Mm.
And they're emerging because both the maturity of the product ecosystem, the tech ecosystem, India as a kind of market, not just to alpha test products, but to really have meaningful revenue, has become sort of more prevalent now than it was before, right? So I think there will be examples, but it's not necessarily that you will take an India first product and take it to the US or to Western Europe or wherever, right? You could take an India first product and take it to South Asia, or you could take it
Absolutely.
to the Middle East and so on and so forth, right? So I think, for example, a lot of the fintech companies, something that we at Prime Ventures invest a lot in, I think there's enormous opportunity for those folks to expand in Southeast Asia or in the Middle East and so on and so forth. So I think those things will begin to happen. But I think the B2C revolution, which is sort of India first but global, is now sort of getting into the second, maybe third gear, right? In the next year or two.
Makes sense. I think working for Southeast Asia market for a while now. I clearly see a similar pattern in terms of demography, the purchasing power parity, and the basic problem sets that the people have over here. And I would definitely be very interested to see few of the Indian companies coming in and capturing the market overall. Let me try to get back to our earlier discussion about your investment thesis. One of the things that I wanted to ask about is what is your investment thesis which makes Prime Venture different from other Indian VCs? And would you be open to sharing and giving us some sneak peek around what happens behind the doors when you make those decisions about which founder to back and which companies to invest in?
So let me take the first one first. So we are primarily an early stage VC that invests in product tech driven companies. That is the first kind of broad thesis there. There are two things we look for that are pretty unique to us, and they're sort of somewhat talked about semi publicly. Therefore, I'm happy to share it. One which I picked at Google, I spent several years at Google, and it was from Larry Page, one of the founders of Google, which is, why is something 10x better? Do you have a shot at making something 10x better? 10x, right, is 1,000% better. It's not 30% better. It's not 18% better. It's not some 200 bips of the margin or whatever. It's like, is it 10x better? And 10x better could be on a variety of different dimensions. It could be customer experience. It could be go to market. It could, of course, be product and tech, which is your podcast here. It could be many different things, but it has to be 1,000% better. If it's 1,000% better, you end up investing in companies which are inherently category defining, or even in some cases category creating, right? So if you look at a company like EasyTap or MyGate or Neo, which is in the digital banking space, etc., these are all very unique, sort of one of a kind companies when they start out. Obviously, if it's a big market, competition will catch up, and other people will come in and so forth. So you do have to compete and win. Otherwise, you don't want to be in a market of one, right? You want to be a category of one, as Peter Thiel would say. So I think that is one very unique thing that kind of we look for. Obviously, everybody looks at TAM, team, and timing. How big is the market? Why now? What's the team like? Is it a complete team? Etc. But really, the two big things I would say that define us are: is it tech product driven? And two, is it 10x better? Does it make it 10x better? And hence, does it have a shot at being a category defining or, God willing, a category creating company? A couple of other things that you end up doing a lot in early stage that we end up spending a little bit of time on, which may be helpful to your listeners, is, what do we look for in the teams, right? That we are backing. Of course, in early stage, there's not a whole lot of traction to go with, right? Probably some early idea, maybe some early customers, maybe a prototype, maybe a few $1,000 or $10,000 of revenue or something like that, right? So one of the things that's really important is the ability of the team to iterate very quickly, and iterate not just in the product and sprints and launching software. Of course, that is very, very critical as well, but to be able to navigate the idea and the landscape very quickly. So we look for that a lot, right? The iteration ability, the learning ability, the speed of iteration, etc. Because in early stage, you have to end up navigating a lot, right, before you come to the product market fit. So that is one thing that is very, very important that we spend a lot of time on, and trying to. Part of it is conjecturing. Part of it is we've learned some lessons from the companies we have backed and the companies we have passed on and so forth. And the other one that I would say is really the velocity, right? Which is that it's one of the things that I've learned in early stages. It's very hard, and it's almost like a Pavlovian push to push products into customers, right? So you want something where there's an inherent pull, from the market. So again, I've sort of written a blog post about this, but suffice it to say that if customers are ready for it in some sense, and you look for proxies to see are customers ready for it, are they pulling the product out of your hand? So even if it's a partly incomplete product or a shabby product or a buggy product or whatever, but they are still pulling it out of your hands. They're investing with their time, often with their money, if it's SaaS and so forth. So those are two interesting thoughts that I think might be useful to share here.
Makes sense. Yeah, I think some of the times the best plan is to not have a plan. Many of the times the founders come up with the entire blue ocean, which are uncharted. How much do you think at that stage a particular founder or a set of founders have the solutions figured out? And do you think that is important from your perspective, how ambitious the plan is and how much the founder has figured out the solution and the market in that particular domain?
Yeah, so often it's not figured out, right, by definition, because we're sort of coming in pretty early. So the two things you kind of look for, and one with a little bit of a tongue in cheek or a little bit of grain of salt, is the market big enough, right? And the classic examples that are always cited are the iPhone and the iPod and Airbnb and others, where there was no hope in hell of market size. And in fact, many of the VCs screwed up and did not invest in companies like Airbnb and so forth, right, early on. So there are these truly kind of one of a kind category creating companies that happen, once in or twice or five times in a decade. But for the most other part, there's some proxy that will tell you that there is kind of real demand and there is stuff. So you want to make sure that there is, by some proxy, right, on the customer side, consumer side, enterprise side, that there is something which says, okay, this problem is real and the pain point is imminent, etc. So we do look for the size of market. On the founder side, we just look for founder ambition. And like I mentioned earlier, learning ability and iterating ability, because there is no hope of any plan, right? I mean, Excel is the sort of most creative, fiction writing tool that has been ever invented. And therefore you can do all kinds of crazy things there. So actually the believability of the plan is very, very limited, to be honest, right? The believability is more on, customer insight, market insight, speed of iteration, learning ability, et cetera, right? Those are the kinds of things you're looking for. Maybe you do look for what are you going to do with, especially if you're in the fundraising context, what are you going to do for the next year with the money that you want to raise? So you don't want somebody who's like, I'll just raise the money and then I'll sort of go to the beach and think, what do I want to do, right? I mean, that's not usually a good strategy. So while I agree with your, like, no plan is a good plan, like you want like some kind of directional, kind of where are you headed, right? What are you trying to prove out kind of thing. But beyond that, if I have to summarize, I would say founder ambition, more important, and large market, more important, right? And then just you kind of iterate your way into finding the product market fit or the solution or whatever.
Got it. So it boils down to the founder's passion, big market, and the product market fit. Thanks, Amit. Which one was your biggest miss in your investment career? Do you also maintain an anti-portfolio and something that you have learned from one and maybe made amendments to your investment principles?
Yeah, there is a long anti-portfolio list. In fact, one is exactly in your space. It is before my time, so I wouldn't say I'm necessarily the one that was on the part of that IC, but one that we would talk about again. So Taxi for sure was a company that we had the opportunity to do the seed round on, and we didn't. And of course, they eventually sold to Ola Cabs, as you may be aware. And the idea there was we felt that it was operationally very intense and was capital intensive, and therefore we didn't do it. And of course, if we had done it as a seed round, even with I think they had a $200 or a $250 million exit, we would have made out handsomely on that investment. And so that is something we wonder about. In the same ilk was another company which was doing quite well, but recently sort of ran into some downturns, was Urban Ladder, right? Which was in the furniture space, right? Online furniture, and they would do custom furniture and deliver it home and all that stuff. Both of those companies we did not invest, primarily for the reasons of operational complexity and capital intensity. Now, in hindsight, I mean, even Urban Ladder up until a year ago would have made the anti-portfolio list. Of course, they had a more modest exit. But in hindsight, both were sort of misses. To your question about whether we would do it again, maybe not, right? But we do think about that a lot. And there is a longer list of anti-portfolio companies, right? Longer than we can go into here. Because at early stage, both a tiger cub and a pup, like a baby dog, they all look the same, right? You're still sort of trying to figure out what this is going to be. So there are plenty of mistakes that you make as an early stage investor. And often when we are even passing investments, we tell the entrepreneur, hope you post this on Facebook or Twitter or Instagram 2, 3, 5 years later saying, look, you buggers, you have no clue, do you? And there's plenty of times where we don't. So we keep trying to learn and iterate. I mean, we are also in some sense a startup, right? We keep trying to learn and iterate from our learnings and mistakes.
Mm-hmm. Absolutely. And I believe you also are picky in terms of the companies that you invest in, by investing about 4 to 5 companies every year. And I believe most of the companies that you have invested in are doing pretty well. And almost everyone is afloat right now. So that's pretty good. And one of the things that I know for a fact that you, along with your partners, Sanjay and Shripati, share a passion for working closely with the founders, especially during the early stage, and enjoy sharing their journey in a high frequency, interactive and fun environment. This reminds me of Vinod Khoshla's quote that an investor is an employee you can't fire. What value do you think a good investor adds in building long-term companies? And how should an entrepreneur go about choosing one?
I actually was not aware of that quote, but it's an interesting one. I'll kind of mull over it later. So I think, look, there are many different ways to invest. I'll go on a little bit of a tangent, but I'll bring it back to your question. So if you look at the public markets, right, You can have a, Warren Buffett kind of, value investor. You could have, hedge fund investors. You could have growth investors. You could have tech only investors. You could have, whatever. So there are many different ways where you can capture value, right? So I think the same thing is true in the private markets, and the same thing is true in early stage, right? So there are investors that I know will swear by, I will only come to the board meeting once every 2-3 months, and so long as the graph is, up and to the right, rah, great job, let's move on, let's not do anything. And then there are others like us who inherently come, probably our own kind of hammer is therefore everything looks like a nail, come from the operating and the entrepreneurial background. So we are very happy to help and roll up our sleeves and do whatever it takes, right? I'm not saying this is a better model or not. This has certainly worked for us, like you said, right? We have a pretty good track record so far. So I think the reason I think it's important, at least for us, and why it has worked for us to be sort of more actively involved in the companies. And by the way, the founders drive it completely, right? So we have no FOMO or, need to kind of be an employee or to need to be a partner in that sense. But we are not passive investors, right? And we believe that in early stages, there are a lot of trade-offs and choices that one has to make. And therefore, just even having somebody there as a sounding board, maybe somebody to open doors, maybe somebody just to even cry, on your shoulder, and so forth, and with reasonable frequency of interaction so that the context is there. Because I remember being in a publicly traded company, Make My Trip, both pre-IPO and post-IPO, most board members were, useful and helpful and so forth. But if you're meeting once in 3 months, you have no context of what is happening, right, in the business. And therefore, that frequency of interaction is really, really important, even if you're not really, quote unquote, adding any value. So I think at least we come from the side that, look, being an active investor is important. The founders pull us. The best founders pull us in the most interesting ways. I just recently heard this from another guest on the podcast that we run, that I think Frank Sootman, I think the founder and CEO of ServiceNow, which is a large global SaaS company, maybe now approaching $100 billion in market cap, on his board meetings, he actually gives action items to each board member, and he follows up 24 hours later saying, hey, did you do that? Like, did you call Mayank because we should hire him in one of our companies as the head of product or whatever? Like, no, well, kind of, no, like you were supposed to call him, like what happened, right? So I think it doesn't matter, but I think people can help in many ways, right? I think we generally tend to have a broader landscape view of the world. We can do a lot more pattern recognition. We can help with the Rolodex. We can help with partnerships. We can help with subsequent fundraising. Or we can just come to the board meeting every couple of months and see that the graph is up and to the right. We prefer the former.
Right. Any anecdotes that you would like to share where you have gone out of your way to help out the founders?
Yeah, I would say out of the way, right? Because like you said, right, we treat it as our duty, right, as our karma, right, to do. So I wouldn't say, but my partner Sanjay, he's gotten on a plane at the drop of a hat, like 2 hours later to fly to Mumbai to help a fintech company do a partnership with a bank. And jokingly, I think the founder, but I won't mention them on the air here. The founder was at that time 23 or 24. And he said, no bank CEO will take a meeting with you. So I'll just come because of my gray hair. Of course, he's being very modest. He's Mr. Fintech before it was called Fintech. But he literally got on a plane and went to Mumbai to help this person get a deal done. And they got to launch their Fintech product with that startup. I helped hire somebody from Google who was pre-IPO Google to come work in a startup, with barely a couple of $1,000s of monthly salary. In a high risk kind of startup, right? And the founder said there's no way we could have even got him to interview with us, let alone join us. And again, I'm not saying this to kind of brag about it. I'm just saying we kind of help in whatever way we can. So let me just leave with those two examples.
Wonderful. I also want to dig deeper about the investment ecosystem of India. We have seen great founders and companies emerging from India and a great interest coming in from the foreign investors as well. But India still heavily relies mostly on, Japanese and Chinese venture capital, especially when it comes to stage B, C, and D funding. And Indian VCs and family houses especially never had that appetite to pour hundreds of millions in these companies. Do you think that's going to change? What do you think about the Indian homegrown fund and capital coming of age?
Yeah, I think, if you look at Silicon Valley, Mayank, it has taken 45, 50 years, right? One of our partners, emeritus, Mr. Raj Mashruwala, he's based in Palo Alto. And he tells us that when he moved to the Valley in 1972 or 73, it looked a lot like India in the 2000s or maybe early 2010s, right? So it takes time for all of this to happen, right? Even if I remember going to China quite frequently, pre-COVID era, and when we would ask people about dollar funds versus RMB funds, Up until 2008, 2010, it was all dollar funds, right? International money was dominating, even in China, where trillions of dollars of market cap was created. Now, pretty much most Chinese VCs have RMB funds, and the RMB funds, I haven't tracked it lately, but are beginning to dwarf the dollar funds, right? Because the returns have been generated, appetite has been created, and so forth. So I suspect India will be similar. I think there are plenty of funds that are dual homed, which raise capital both from India and from abroad. I think that will happen. I also think that there is also coming of age in terms of investing in innovation, because classic Indian business houses, and not to name names, but if you look at the Tata Group or the Birla Group or whatever, I mean, they're very classic, traditional businesses, right? Like, what is the EBITDA? What is the cash flow? What is the gross margin? What is the net margin? And all of these things are also important. Make no mistake in the startup, but often the gestation period is much longer, right? Investing in innovation, that cycle is much longer. So I'm not sure when they will come and invest, but they're certainly acquiring companies left, right, and center, right? All these big names and Reliance and so forth. So I do think that perhaps the next 10 years you'll see a lot more rupee funds, if I may, right? And large ticket dollar amounts, as you're saying, or rupee amounts coming into these startups. And these startups also are beginning to generate a lot more traditional business economics, right? Like in terms of cash flow and revenue and so forth, which used to be a little bit more ephemeral earlier.
And right now, what's the status of Indian startup ecosystem in terms of access to fund? Do you think it has become easier than, let's say, a couple of years back? Definitely, it's much better than a decade ago. But lately, every other startup which had slightest hint of product market fit was raising loads of VC money. And we have seen that a lot of investors have burned their hands as well. Do you think the ecosystem has stabilized right now, or it's even a longer way to go? And especially how things have changed after the COVID.
Yeah, so I think that couple of basic sort of assertions. I think good companies will never have problem raising money, right? Good companies were able to raise in the 2008 meltdown. They were able to raise, in the 2012, 2013 era, and so forth. So they'll always be able to raise, right? That is not an issue. I think the problem is how many good companies can raise, right? And is it over indexed on the power law, right? On the Zipfian curve, right? If it's only 10 companies that everybody is chasing, then you will get these random kind of large rounds over competitive and so on and so forth, right? But if you look at the broad market, I think both the quality of the entrepreneurship as well as the number of companies have evolved, right? There are a lot more interesting companies that are being built out of India, and also that there's a lot more capital, right? So funds like we have, like there are many other funds as well that are investing. So I think there is broader maturity. I think good companies will always be able to raise. It doesn't matter. I think there'll always be a few, FOMO type investments, right, from VCs, because like we talked earlier in the podcast, often you don't know, right, like which one is the tiger and which one is the pup, right? So you're like, people are like, don't want to miss out kind of a thing. But if you still ask me, I think the market is overall underinvested, right? And in particular, perhaps at the early stage, and I think maybe you alluded to this earlier, maybe even at the Series B, Series C level, right? And it changes, right? Like a marketplace, you're in Grabs, you know this, right? I mean, sometimes the demand is too little, sometimes the supply is too little, and you kind of keep sort of going in sync. So I think that certainly a year or two ago, Series B and Series Cs were much harder to come by. I think seed is also probably a little bit underinvested because, I think Bangalore alone has 7,000 startups, right? And at least my kind of soundbite news bite metric is that maybe 300 or 400 companies are getting invested. So I'm not saying that all 7,000 are investable, but maybe 700 are investable, right? But maybe only 300 are getting invested in, right? So therefore, I think there is, in a marketplace sense, there is need for both more supply, meaning more capital, and probably higher quality entrepreneurs. So it's not just or companies, right? So it's not just the 10 or 20 that everybody is trying to invest in, but maybe it'll be wonderful if it was like 100 companies that everybody wants to invest in. There's enough to go around.
On that particular note, how do you think a society should have such marketplaces inbuilt in its economy? Do you think there has to be few institutions that maybe facilitate these marketplaces to balance supply and demand, or do you think it's just a cohesive nature of how economy works that these things would fluctuate a little bit here and there, but eventually would come to a balance just because of how capitalism works?
I mean, it's a loaded one, and I'm not an economist, so it's hard for me to say, but I'll give you my sort of more pragmatic viewpoint. So I think the natural market forces are the best ones, right? There's enough capital that will chase innovation and growth, and that capital will come to bear, and it has come to bear, and it continues to increase, right? So the number of dollars invested in the Indian private market ecosystem has only gone up year after year after year, right? Even though some of it may be kind of taken by the power law, the Zipfian curve, the top companies there, but still there's more capital even for the early stage. I think the role that the government or the society can play is slightly different. At least this is my personal point of view, and again, not speaking as an economist, but more as a VC practitioner. Is that I think if the government starts buying software, right, or investing in things that enable startups to thrive, and I don't mean just like give me tax credit or whatever, right, really deploying things. So for example, I think the government has done an amazing job, and two of my partners worked on this whole this digital India, or India stack as it's called, things like Aadhaar, UPI, etc., which have become the rails for a whole bunch of startups, right, and have really enabled digital India, if I may say so, right, also one of the areas that we like to invest in Prime. So I think if the government not just invests in public goods and public rails and like open source and so forth, but also becomes a buyer of software, a facilitator of transactions and so forth, I think those things can help like in a big way to accelerate it. But beyond that, on the pure capitalistic side, I'm not too sure. Maybe one more idea that I have, which I think is very, very prominent in the US, is investing a lot more in research and early research. So if you look at the graduate school programs, a lot of the people like me who left abroad for grad school and so many others, right? All of us left because there wasn't enough of high quality grad school programs. And again, of course, I left many years ago. But even today, I don't think there's that many PhDs coming out of India in computer science or healthcare or robotics or AI or genomics or all these things. So maybe the government can invest a lot more and make it a lot more attractive, because a lot of the innovation that comes from the Valley or from the US in general comes from all the government investments in universities, in NSF, in DARPA, and all these things. So those are two things I would say: buy from startups, and to invest heavily in R&D at the grad school kind of level, right? Make it very attractive for people to go do PhDs, because maybe the next Google can come from there.
Absolutely. I think very fair points. I think yesterday itself, Government of India sort of democratized the map building in India. Now anyone and everyone can go and build maps in India. So I think that's a very good sign. The other thing that you mentioned about that, how the grad schools should cater to needs of the society. This reminds me of Israel. Israel is sort of a power hub of innovation, and especially in terms of cyber warriors, as they say it. And they have this after school classes for people who are not good in academics but can excel sideways in computer science and cyber issues and so on and so forth. And because of that, they've created an entire generation of cyber warriors. And I think similar pattern, we are seeing a lot of innovations coming in from China in terms of AI and deep tech. And I think artificial intelligence at some level would be that generation defining technology, which I believe we have the demography, but would require, to hone the skills of our youth. Just taking a separate tangent into investment, what do you think about retail investing and crowdfunding? We recently saw an unprecedented rise of retail investors in the form of Wall Street bets in the stock markets, pushing the price of, GameStop, etc. And ICOs are also becoming very popular these days. What do you think about this as an alternative for companies?
Again, you're testing the fact that I've not taken any course in economics, but let me let me hazard a guess. So I definitely think that there are two schools of thought that I have in my head. Right, one is that it should be much more open and accessible to people that want to invest. That said, it is an extremely high risk asset class. So if I were the regulator, I would be really worried about people losing their shirt and the pant and everything else, their socks, right, along the way. So I think that at least in the US, there's this notion of an accredited investor, right? Saying that it shouldn't be more than X percentage of your net worth or your X percentage of your last year's annual income or something like that, that you're allowed to invest into these more risky asset classes, right? Whether it be startups or, cryptocurrencies or whatever it is, right? So you as the provider, the supplier of those kinds of assets have to ensure that the investor that's coming onto your platform has a certain level of net worth, right? Because otherwise you would in these high risk asset classes, you could lose everything, right? So that is one part of it. That said, I think there is just so much innovation that is happening that it's a pity, right? If people are not allowed to invest in theory, right? If I'm a very happy Grab customer or an Ola cab customer or a Flipkart customer or an Amazon customer, at the early stages, I don't mean post IPO and all that, right? That I shouldn't be allowed to invest in that if there was a possibility, right? Now, which way you do it, there's all kinds of complexity and secondary markets and marketplaces, or maybe even an exchange for startups like a Nasdaq or a BSE kind of exchange. All that is to be determined, but at least that access should be available to people who at least have some base understanding and a certain sort of income accreditation, right, sort of level. Keeping it more confined, right, to kind of only people who have access, quote unquote, I don't think it's a good effect. I mean, I don't think it's a good thing, because then as the disruptive innovations happen, unfortunately, this whole Cantillon effect, again, right from the economics literature, which is that the rich get richer because they are the only ones who can invest in the Grabs and the Ubers and the Olas and the Amazons of the world, and therefore they generate even more capital that will give them further access to invest more capital. Whereas people who don't have access, right? I mean, since you mentioned COVID, I mean, so many people lost their jobs and all that stuff. Maybe people are not even invested in the public markets. Forget these more esoteric private things and cryptos and all that. So I am much more of the opinion that it should be much more accessible and much more open and much more transparent with certain guardrails, right? So that at least the naive investors don't get duped, right, by the flashy scheme of the day.
Makes sense. Do you think that customers investing in the companies that they buy from would also create some sort of loyalty towards the companies as well, because now they have the skin in the game?
100%, right? And that maybe, I don't know if you're alluding to that with your ICO comment. I have many a time bought companies whose products I love, right? A la Peter Lynch from the public markets, right? Like Warren Buffett-esque figure. And I remember one investment I made many, many years ago. This is, of course, in the US. I don't think they're in Southeast Asia. Certainly, I think they launched in China. Is a company called Costco in the retail space, right? Sort of bulk retail. And every once I bought it, every time I would go to Costco and the queue was like a kilometer long, I would love it. I'm like, I'm a shareholder. I mean, why are there so few people? Like, I want to wait an hour in the queue, right? Like, this is great. So I think that if I love products and I patronize them with my customer dollars, I should be able to patronize them with my investment dollars and make money from it, right? I've been a big Android fan for many years, but finally got back into the iOS ecosystem. And I'm like, you know what? I should have just bought Apple stock 10 years ago and I could have paid for every Apple device, given how expensive they are, because I love the product. And I mean, the stock, of course, has done really well. So I think it's a great idea. And I think it creates tremendous loyalty, because now whether it's a Costco or an Apple or XYZ companies that I patronize, at least with my customer dollars, I obviously prefer them, right?
Absolutely.
Because I'm also an investor, no matter even if I have 10 shares or 5 shares or 50 shares, doesn't matter.
Yeah, I'm also an Android user, by the way, but it seems that I'll have to get an iPhone, or else I'll have to wait for long to get Clubhouse on Android. I know that you are fairly active on LinkedIn and Twitter. Are you also already on Clubhouse?
No, I am not yet, but my partner Sanjay sort of started something recently there. And, we, of course, like you said earlier about product management and investing, one of the luxuries and privileges of this job is to dabble in a lot of different things, right? In fact, our own podcast was a result of just dabbling and saying, okay, let's go talk to interesting people and bring interesting stories to entrepreneurs and VCs. So yeah, I've tuned into many a Clubhouse session, but haven't hosted one yet. Maybe soon.
Absolutely. Would look forward to that. You share a lot of your thoughts and philosophies on social media as well. And I think we need more investors and people from the startup ecosystem to share their learnings across with the entire generation of young people. Is there any unpopular opinion that you would like to share that people do not agree with you on, but you strongly stand by?
Okay, now you're really getting me into the trap here, but let me share it anyway. So I think there's this big myth in every which way, and I'm sure you'll get flamed, but like they say, all PR is good PR, that only IIT and IIM founders are investable, right? I think that's a load of bullshit. Even in our own portfolio, more than half of it is not like that. And I certainly know, I mean, there are VCs who would prefer that, and they have their own reasons. That is one myth that I would like to bust, that I think great entrepreneurs can come from any schools, any demographic. In fact, now I think this whole credentialing thing is going to go away, right? Because with sort of more and more things become more open source and you can have your stuff on GitHub, or you can launch your own clubhouse or your own D2C brand or your own app or whatever, right? You don't, I mean, I can go check out the product or the experience, and it doesn't really matter whether you're from IIT or IIM or wherever, right? Etc. That is one area. And the second, which again certainly we don't believe in, but maybe a lot of people do, is that entrepreneurship is a game of the young, right? That only the 22-year-olds are going to become the next Zuckerbergs and Bill Gates and so forth. I think the young people are a force to be reckoned with, and they are amazing people to back. But we have seen some amazing entrepreneurs in their 30s, 40s, and even 50s, right? Who are just amazing entrepreneurs, right? And in fact, some of the more legendary kind of previous generation or two generations ago companies like Intel, like Adobe, etc., were built by founders who started in their 40s, right? And even in a tech competitive area, I'm comparing it to India now, right? So I think that there is a lot of these two are things that are probably not very popular, or certainly controversial. I wouldn't say popular or not, because a lot of founders believe that only IIT and IIM founders get backed, and a lot of VCs also believe that, of course, off the record, and likewise on the age dimension, right? And we think that these are all somewhat bullshit, right? I think a great founder can be anywhere. I mean, it could be a 22-year-old who's a phenomenal founder, and it could be a 42-year-old who could be a great founder starting up now.
One last question, Amit. What does your crystal ball say about the next decade? Any sectors that you would like to bet on? What are you personally most excited about for the next 10 years?
I think we are on the second floor of a really tall building, right? And it has taken a long time to build the foundation, maybe the basement, floor one, floor two, etc. And some magical things have happened, right? Like we talked about India Stack, digital rails, mobile payments, mobile data, etc. India itself as an economy is growing, right? I mean, you're sitting out of Singapore. So you know that when per capita income reaches a certain threshold, right? The famous Alibaba study, $4,000 per capita, magic happens on all this internet commerce, digital economy, etc. So I think as our Prime Minister, Mr. Modi, has said, right, we'll be a $5 trillion economy, $5 trillion economy in 5 years. Now, whether it takes 5 or 7 or 8 or 4, we don't know. But okay, somewhere in the next decade, we're going to be a $5 to $7 trillion economy, a top 5 economy in the world. Pretty much everything is up for grabs, right? No pun intended. I think that, we are very bullish on fintech and financial services. I think that's going to be really amazing. We often talk about something called digital India. So India is going from, data poor to data rich, no tech to everything tech, no internet connection to everybody on a smartphone, mobile with high-speed internet connection. So every part of the economy is going to get digitized, right? Whether it's healthcare, whether it's education, whether it's agri-tech, whatever. So I think all of that is up for grabs. And even though you asked me to put it on the parking lot, I'll put it back on the floor here. I think SaaS is also going to be very big from India, right? Because India has the muscle power, in terms of engineering, product, and now distribution, GTM, understanding distribution networks like the Googles and Facebooks and others of the world, right? The G2 crowds and the Capterras, that I think these three trends are super exciting, and we are looking for entrepreneurs to back in each of these areas. Fintech, digital India, as well as global SaaS.
Interesting. Super fascinating, Amit. Thanks a lot for coming on the show. It was delightful to have a conversation with you. Thanks a lot.
Thanks, man. Pleasure to be on the show.
To my listeners, I'm glad that you made it until the end, and I hope you enjoyed listening to the episode. I'll be publishing one episode every 2 weeks, at least for now, which means that you'll have one new episode every alternate week, mostly on Wednesdays. Of course, till the time guests are willing to come on the show and talk to me, and I have few listeners, however modest in number. So, please subscribe and follow the show on whichever podcasting platform you use to get notified about all the new episodes.